Hey everyone, welcome back to Bonnie's Life. I'm your host, Bonnie. And if you're new here, make sure to hit that subscribe button and ring the notification bell because we're diving deep into the crypto world every single week. Today, we're talking about what has been an absolutely wild 7 days in cryptocurrency markets. And trust me, you're going to want to stick around for this one because we've got some serious developments that could change everything. So grab your coffee, get comfortable, and let's break down what happened between June 9th and 15th, 2025. And I promise you, by the end of this video, you'll have a crystal clear picture of where the market is heading and exactly what you need to watch for in the next 24 hours to make some smart trading decisions. First things first, let's talk about the elephant in the room. Bitcoin is sitting pretty at around $105,000. And before you start thinking, oh great, another sideways week, let me tell you why this particular consolidation is actually setting us up for something massive. You see, while everyone was panicking about Iran and Israel tensions earlier this week, Bitcoin did something that honestly surprised even me. It dropped $5,000 in what felt like minutes. Everyone thought the sky was falling, and then, boom, it bounced right back up like it was on a trampoline. Now, I've been doing this for a while, and I can tell you that this kind of resilience during geopolitical chaos is not normal for Bitcoin. Remember 2022? Remember how every little piece of bad news would send us tumbling for weeks? Well, those days seem to be behind us, and there's a very specific reason why. Institutional money, my friends. Real, serious, I'm not going anywhere. Institutional money. Speaking of institutional money, we need to talk about what happened with Trump media this week because this is absolutely huge. The SEC, yes, the same SEC that's been giving crypto a hard time for years, just approved a $2.3 billion Bitcoin Treasury deal for Trump media. Let me repeat that. $2.3 billion with a B. This isn't some small tech startup buying a few Bitcoin for their balance sheet. This is a major media company getting regulatory approval to dump over $2 billion into Bitcoin. And here's the kicker. The approval process was fast, like suspiciously fast for the SEC. Usually these things take months of back and forth, lawyers arguing over every comma, but this went through like butter. What does that tell us? It tells us that the regulatory winds are shifting, and they're shifting hard in favor of crypto adoption. But wait, there's more. And I know that sounds like a cheesy infomercial, but seriously, there's more. We had over 60 companies announce Bitcoin treasury strategies just this week. 60. That's not a trend anymore, that's a stampede. MicroStrategy, our old faithful Bitcoin maximalist company, bought another 705 Bitcoin worth $75 million. Michael Saylor is basically treating Bitcoin like it's going out of style, except he's buying it, not selling it. And then we have Meta Planet. Now this is interesting. They picked up 1,088 Bitcoin for $114 million, bringing their total to 8,888 Bitcoin. I love that number, by the way. Very feng shui. But jokes aside, what we're seeing here is a global phenomenon. It's not just American companies anymore. International corporations are following the MicroStrategy playbook, and that's creating a supply shock that most people aren't even aware of yet. Now let's talk about something that had the crypto Twitter absolutely losing their minds this week. Michael Saylor, the guy who literally wrote the book on corporate Bitcoin adoption, came out and said, and I quote, "You don't need Bitcoin." The internet exploded. People were calling it the biggest U-turn in crypto history. Bitcoin maximalists were having existential crises. It was chaos. But here's the thing, and this is why you need to always read beyond the headlines. Context matters. When you actually listen to his full statement, he wasn't saying Bitcoin is worthless. He was making a nuanced point about specific use cases and demographics. But of course, the media ran with the sensational headline, because that's what gets clicks. This is exactly why I always tell you guys to do your own research and not just react to headlines. The market's reaction was interesting though. We saw some initial volatility, but it recovered quickly. And you know what that tells me? The market is maturing. We are not as susceptible to individual opinion leaders as we used to be. Even someone as influential as Michael Saylor can't single-handedly crash the market with an out-of-context quote anymore. That's actually really healthy for the long-term stability of crypto. Let's shift gears and talk about something that could be absolutely massive for mainstream adoption. Walmart and Amazon are reportedly considering their own stablecoins. Let that sink in for a moment. The two biggest retailers in America are thinking about creating their own digital currencies. If this happens, and I mean if, because these are still just reports, but if this happens, it could be the catalyst that brings crypto to every household in America. But think about it. Your grandmother who's never heard of DeFi or yield farming suddenly has a Walmart coin in her digital wallet because she gets a discount for using it. Your neighbor who thinks Bitcoin is internet funny money is suddenly using Amazon's stablecoin for online purchases. This is how mass adoption happens, not through complex DeFi protocols, but through simple everyday use cases that people can understand. Now, let's get technical for a minute because this is where things get really interesting for us traders. Bitcoin has established incredibly strong support around $105,000. This level has been tested multiple times this week, and it's holding like a fortress. The technical significance of this cannot be overstated. We're seeing institutional buying every time we touch this level, which tells me there's serious money waiting to accumulate at these prices. On the resistance side, we're looking at $110,000 to $112,000. This is where things get tricky. We've tested this level several times and haven't been able to break through with conviction. But here's what's interesting. The volume profile shows that once we do break through this resistance, there's not much stopping us until $120,000. It's like a technical vacuum zone. The RSI is sitting in neutral territory between 45 and 55, which means we could go either way depending on the catalyst. The MACD is showing signs of a potential bullish crossover, but we need confirmation with price action. What I'm watching for is a break above $110,000 with significant volume. If we get that, I think we're off to the races. Ethereum is telling a different story, and this is why diversification matters. ETH is consolidating between $2,400 and $2,700. And this consolidation is actually really healthy after that massive 50% rally we saw in early May. The key level to watch here is $2,879. If Ethereum can break above this level with conviction, we're looking at a potential run to $3,153. What's really interesting about Ethereum right now is that its correlation with Bitcoin has decreased. Usually when Bitcoin moves, Ethereum follows like a loyal puppy. But lately, ETH has been doing its own thing, which suggests it might be developing independent price dynamics. This could be driven by the growing DeFi ecosystem, upcoming network upgrades, or just the market recognizing Ethereum's unique value proposition. Let's talk about something that not many people are paying attention to, but absolutely should be: the derivatives market. About 80% of CME crypto futures are set to expire by August. That's a massive concentration of expiring contracts, and historically, these expiration periods can create significant volatility. We're talking about potential for some serious price manipulation around settlement dates. There's also been a shift in Bitcoin liquidity toward non-KYC exchanges, while US exchange reserves are thinning. This is creating a supply constraint that could amplify price movements in either direction. It's like having less water in the pool. Every splash makes bigger waves. Here's something that should make every Bitcoin holder smile. The network hash rate is up 40% this year. That means miners are continuing to invest in infrastructure, expanding operations, and strengthening network security. When miners are bullish enough to spend millions on new equipment, that tells you something about their long-term confidence in Bitcoin's value. Now let's talk about what you really came here for. Trading strategies for the next 24 hours. Based on everything we've discussed, here's what I'm watching. For Bitcoin, I'm looking for a potential breakout above $110,000. If we get that with volume, my first target is $115,000. But if we fail to break through and start seeing weakness, I'm watching for a potential retest of that $105,000 support. For Ethereum, the play is similar, but the levels are different. A break above $2,879 could send us to $3,100 pretty quickly. On the downside, if we lose $2,400, we might see a test of $2,200. Risk management is crucial right now. The geopolitical situation is still fluid. We've got these derivatives expirations coming up, and the market is at a critical technical juncture. I'm keeping position sizes smaller than usual and setting stops more conservatively. For Bitcoin, I'd set stops below $103,000, and for Ethereum, below $2,350. Here's a specific strategy for the next 24 hours. If you're looking to enter Bitcoin, wait for a pullback to the $105,000 to $106,000 range. That's your risk-reward sweet spot. If you're already holding, consider taking some profits if we hit $109,000 to $110,000, and then look to re-enter on any pullback. For Ethereum, range trading might be the play here. Look for entries around $2,450 to $2,500, with targets at $2,650 to $2,700. If we break above $2,879, that's when you want to be aggressive on the long side. Option strategies could be particularly effective right now. Covered calls on existing positions can generate additional income while maintaining upside exposure. Put spreads can provide downside protection at a reasonable cost. Let's talk about some of the altcoins that caught my attention this week. Solana was the standout performer, gaining over 1%, while most major cryptos were flat or down. This outperformance is likely driven by continued development in the Solana ecosystem and growing institutional interest. The technical setup for SOL looks pretty bullish, and it might be worth keeping on your watch list. XRP had some interesting developments in the derivatives market. We're seeing increased leverage and rising funding costs, which suggest growing speculative interest. This could be driven by ongoing legal clarity and institutional adoption prospects, but the increased leverage also means higher volatility risk. Now, I want to address something important about information sources because this week really highlighted how crucial it is to verify what you're reading. The Michael Saylor situation is a perfect example. Different outlets reported the same story with completely different spins, and some were downright misleading. When you're making investment decisions based on news, you need to consider the source's reliability. Tier 1 sources like Bloomberg, Reuters, and CoinDesk have rigorous fact-checking and editorial standards. Tier 2 sources like other crypto publications are generally reliable, but might have some bias. And Tier 3 sources like social media require immediate verification before you act on anything. Here's a pro tip. Always try to find the original source of information. If someone claims a CEO said something, find the actual interview or statement. If there's a regulatory announcement, check the official government website. This extra step can save you from making decisions based on misinformation. Speaking of social media, the crypto Twitter landscape has been fascinating this week. We're seeing more institutional voices joining the conversation, which is elevating the overall quality of discussions. But we're also seeing more sophisticated manipulation attempts. So you need to be even more careful about what you believe. The partnership between X and Polymarket is particularly interesting. This integration of prediction markets with social media could create new ways to gauge market sentiment and discover information. It's still early days, but this could be a game changer for how we analyze market psychology. Let me share something that I think is really important for long-term success in crypto. The market is evolving rapidly, and the strategies that worked in 2021 or even 2023 might not work today. We're seeing increased institutional participation, better regulatory clarity, and more sophisticated trading infrastructure. This means the market is becoming more efficient, but it also means there are new opportunities for those who adapt. The key is to stay educated, stay flexible, and never stop learning. The crypto space moves fast, and what's true today might not be true tomorrow. That's why I make these videos every week, to help you stay on top of the latest developments and make informed decisions. Looking ahead to the rest of June, there are several things I'm watching closely. First, any additional corporate Bitcoin adoption announcements could provide significant bullish catalysts. Second, regulatory developments, particularly around stablecoins and corporate crypto strategies. Third, the ongoing geopolitical situation and its impact on safe haven demand for Bitcoin. From a technical perspective, the next few days are crucial. We're at a decision point for both Bitcoin and Ethereum. A breakout could lead to significant upside, while a breakdown could test lower support levels. The derivatives market dynamics add another layer of complexity that we need to monitor. For those of you who are new to crypto trading, let me give you some advice that I wish someone had given me when I started. First, never invest more than you can afford to lose. Crypto is volatile, and even the best analysis can be wrong. Second, always have a plan before you enter a trade. Know your entry point, your target, and your stop loss. Third, don't let emotions drive your decisions. Fear and greed are the enemy of good trading. And finally, remember that crypto is still a relatively young market. We're witnessing the birth of a new financial system, and that comes with both incredible opportunities and significant risks. The key is to approach it with the right mindset, educated, cautious, but optimistic about the long-term potential. Before we wrap up, I want to remind you that none of this is financial advice. I'm sharing my analysis and opinions, but you need to do your own research and make your own decisions. Everyone's financial situation is different, and what makes sense for me might not make sense for you. That said, I hope this analysis has been helpful in understanding what's happening in the crypto markets right now. We're living through some truly historic times, and I feel privileged to be able to share this journey with all of you. If you found this video valuable, please give it a thumbs up, share it with your friends, and don't forget to subscribe if you haven't already. Your support means the world to me and helps me continue creating content like this every week. I'll be back next week with another deep dive into the crypto markets. Until then, stay safe, stay informed, and remember, in crypto, patience and education are your best friends. Thanks for watching Bonnie's Life, and I'll see you in the next one.